Assalamualaikum and hello everyone. First of all, thank you for coming to our forum about which is better, Islamic or conventional. I'm Siti Nafisina, a moderator for today. Here we have several panels that come from different financial institutions to explain the differences of Islamic and conventional finance. Firstly, Ms. Farhana, a manager in Bank Islam. Next, Ms. Amira, the Sharia analysis of Bank Islam. Then we have Ms. Shafia, the auditor of Bank Muamalat. Last but not least, Ms. Aisha, a financial advisor in Bank Islam. Before we start our forum, let me explain the value proposition of conventional. Firstly, the main focus of conventional in attract customer is to maximize the profit by using interest. Furthermore, the conventional relies more on assumptions made by human decisions. For example, the economists of conventional will choose the principle by which economic system that currently operate. So, it's driven by human greed and self-interest. We can conclude the conventional only focus on how to make profits and involved in all activities such as alcohol and gambling. Therefore, let's hear the opinion from Ms. Farhana about the value proposition of Islamic finance.
Thank you, Ms. Christina. My name is Nofarna. First, I will describe in greater detail about the value proposition of Islamic finance. First of all, Islamic finance strives to maximize profit based on Sharia law and legislative requirement. Next, Islamic finance applies with ethical values such as justice, fairness, trust, honesty, integrity, and balanced society to promote good governance and transparency. Last but not least, Islamic finance promote economically productive activity through genuine trade business transaction. It calls for avoidance of interest based on speculative transaction and illegal and unethical activities. In a nutshell, as a manager of Bank Islam, I want to share that Bank Islam, being an integral part of the overall Islamic economic system, have conducive environment that operate effectively and efficiently. So, let's move to the Bank Islam.
Thank you, Ms. Hana, for the sharing. Yeah, I guess we already get the view about the value proposition of Islamic finance. And now we will go deeper about Islamic finance mechanism. As we know, both conventional and Islamic finance has its own operation. So Ms. Shafia, can you tell us more about the structure and operation of Islamic finance?
Thank you, Ms. Christina, for the question. Alright, ladies and gentlemen, when we talk about conventional and Islamic finance, the core difference of these two is about Sharia compliance. In general, conventional finance are focused on economic and financial aspects. Meanwhile, Islamic systems are focused as whole in terms of ethic, moral, social, and quality. Back to the question just now, I will share about the structure and operation of Islamic finance to let you guys clear about it. The structure of Islamic finance system are similar to conventional, where both systems are operated and regulated by Bank Negara Malaysia. Both systems will refer the guideline provided by BNM to run its operation. However, Islamic finance system needs Sharia Advisory Councils, known as SAC, where BNM gives them authority to decide on Sharia matters and they will rule the court on Islamic finance cases. In the organization, basically they will have Sharia committee to take over any issues related to Islamic finance. Then let's move on to the operation of Islamic finance. In Malaysia's global banking environment, the Islamic finance system operates in parallel to the conventional financial system. Islamic financial system operates under comprehensive regulatory, supervisory, and Sharia framework, where the operation will avoid any activities that involve riba, gharar, and anything prohibited by Sharia law. I hope that I answered the questions. Dear all, I will pass the floor to Ms. Amira to continue the session.
Okay, thank you to Ms. Shafia. Next, we will look further on the Islamic finance issue, which is there really Islamic banking has no interest? According to the article of Islamic banking interest-free or interest-free, Islamic banking is different from conventional in theoretical perspective because of interest. But actually, the interest banking are not really interest-free. This is because the feature of Islamic banking is its profit and loss sharing, which called mudarabah as well as musyarakah joint venture. In this concept, the assets and liability of Islamic bank are integrated in the sense that borrowers share profit and losses with the bank, which for instance, one investment that generated profit, the parties, Mudarib and Robumal, will share the profit at predetermined percentage. It same goes to the case when there are losses. It can be said that Islamic deposit rates are mostly lower and less volatile compared to conventional banking, and that's the reason Islamic finance is not really interest-free. Thank you.
It was a good sharing from them. And now we are more clear about the mechanism. Then let's move to Miss Aisha. So what do you think about Islamic financial market? Is there any difference between financial instrument for Islamic and conventional?
Okay, thank you, Ms. Christina, for the question. For me, different financial institutions provide different structures of instruments, but the functions of those instruments are still the same because of their objective to facilitate business and individual in daily life activities. Let me explain and compare the instrument offered in Islamic financial system with conventional so that we can have a better understanding of Islamic finance. Okay, so for Islamic financial instruments in Bank Islam, they offer the Tawarruk instrument, which is applied to Baiti home financing. If people prefer to have home Islamic financing, the best way is to choose the instrument that complies with Sharia compliant. In the Tawarruk instrument, there are no compounding elements, no processing fee, and no penalty at an early settlement. But unlike conventional instrument for home financing in Maybank, the compounding element, processing fee, and penalty at an early settlement exists. If you, as a borrower, make a loan in Maybank for like 10 years, but intend to settle the loan in 5 years, there will be a penalty fee imposed for early settlement. From this, we can see that it contains riba, which does not comply with Sharia. Now, for the Islamic financial market instrument, I will pass to Nur Fahana for further explanation to understand more about this kind of instrument. Thank you.
Thank you, Ms. Aisha. I will explain more detail about the type of Islamic financial market, which is have debt and equity market, money and capital market. As you know, by issuing debt security bond or equity security stock, the debt instrument represents a contractual agreement that borrower is obliged to pay the holder of the instrument a certain fixed amount of money at agreed interval. However, equity security differ from debt security. In that, the former represent a partial ownership in the issuing entity while the latter have no such right. In addition, the money market is the financial market that facilitates the trade of only short-term debt security less than 1 year. While the capital market is the financial market that facilitates to trade for the longer term. For the longer term debt security, a year or greater, and equity security. That's all from me. Thank you.
Okay, now we have arrived at the end of our forum. Thank you for all panels for sharing the knowledge about Islamic finance. After the discussion, I hope the viewers will get the image of how Islamic finance works, and I hope you guys can decide by yourself whether Islamic finance or conventional finance is more better. Until the end, thank you for your participation and we hope to see you again, inshallah.